This is Richard Flax at MoneyFarm, welcoming you to the latest of our regular market updates. The last month has been pretty positive for equity markets, really riding the wave of the economic recovery that seems to be taking hold across a majority of the developed markets. In this video, we'll touch on some of the key drivers that we've identified over the past few weeks. First, let's turn our attention to earnings season. In April, we begin to see reports, particularly in the US, from companies on the performance that they've generated in the first quarter. The key question here was whether or not the strong economic recovery that we've seen in the macro data was going to translate into corporate profitability and corporate earnings. And broadly speaking, the answer is yes. Generally, US companies, at least those who've reported, have done significantly better than market expectations. The interesting question here, though, is one of sustainability. Will this just be the bounce back of a single quarter, or will we be able to see strong performance through the rest of the year? A lot of that will depend on the sustainability of the economic recovery, and overall we're generally positive in this regard. We've seen the strong performance be fairly broad-based, financials and energy companies, and we've seen high levels of interest in things like mergers and acquisitions, retail investment, retail trading, suggesting that not only is the economic recovery in decent shape, but there's obviously a high level of positive consumer sentiment. On the other side, we've also seen relatively significant increases in the costs of raw materials. Lumber, timber, driven to a large extent by increased house building, copper, and steel. So overall, we've seen a pretty positive outlook across most of financial markets. It's not been quite as robust in Europe so far, but overall, the European companies are also showing a pretty positive trend. All of this depends, of course, on continued progress on the pandemic, on the vaccination programs, and we're continuing to see those roll out relatively well in developed markets, although unfortunately not at the same pace across a number of emerging markets. In terms of the overall market, April was notable for a little bit of a rotation. If you think about the first quarter of the year, we saw value stocks, lowly rated companies perform relatively well. In April, we saw some of the leaders of 2020 on the tech side also perform much better. And we've seen the justification for that in terms of some very strong numbers that these companies have reported in the last couple of weeks. Nonetheless, when we think about going forward from a portfolio perspective, we continue to think that some of the value stocks have opportunities, and we've continued to have a slight tilt in our portfolios towards global value stocks. Finally, it's important to touch on inflation, and inflation is becoming an increasingly important part of the discussion, driven partly by a robust economic recovery, partly by base effects when you compare where prices were a year ago to where they are today, and also by the strong recovery we've seen in commodity prices. Now, we've seen inflation expectations begin to pick up, and we're going to continue to monitor the regular inflation reports and price reports to try and understand whether the bounce back that we expect to see in inflation over the coming months is really just a short-term blip, which seems to be the general view of central bankers, or really something more sustainable. For now, we think that central bankers will err on the side of caution, will leave the stimulus that they have in place for a little bit longer in order to ensure that the economic recovery takes hold. And in general, be prepared to tolerate inflation that looks a little bit higher than their long-term targets, primarily because they and we expect them to be relatively short-lived, a relatively short-lived blip in inflation that should begin to drift down towards the end of the year. That's an important assumption, and it's one that we'll continue to validate. But for now, we continue to remain constructive on markets. The underlying global recovery seems to be in decent shape, and we're seeing that reflected, at least in the first quarter, in terms of strong corporate profitability and earnings. Thank you very much and look forward to speaking to you again soon.